I turn to the revenue sector. There's a little bit for everybody in this budget, but the response initially from the capital markets was, we've been dealt a rough hand, a stick has been wielded as far as capital gains taxation is concerned.
Well, this first of all, you know, this is really a simplification measure.
Okay.
There was, this commentary that the capital gains taxation is very, very complex. The holding periods for different asset classes, and same asset classes also, if it is listed, there is a different rate.
Absolutely.
If it is non-listed, it is a different rate. Indexation is given to certain asset classes, not given to certain asset classes. Holding periods are different. So the first thing that the government has done, and that we believe, has been a continuing agenda for us, and that is something which we believe will help in promoting investment, in promoting employment. Apart from, the scheme, you talked about employment. How do taxation regimes, help in promoting investment and employment is a very, very major theme in this particular budget. Simplification, we believe, bringing in, tax, because that brings in tax certainty, it reduces disputes, and so it spurs investment and so employment. And so this capital gains really, is a simplification which we have attempted. In the process, yes, a very marginal increase of 2.5% is there, on certain asset classes, on, the listed securities. It's a very small increase. I may also tell you that this tax is primarily paid by those who are in the higher income classes.
Right.
We did an analysis for the capital gains that we received in the year 22-23.
Okay.
And we found that the long-term capital gains tax is actually paid primarily by those who have an income of more than 15 lakh rupees. 88% of the income of about 40,000 crore that we got that year is by those having income more than 15 lakh. 60% plus is coming from those who are having an income of 1 crore more. So I think this is a tax which is on those who can afford it.
Right.
And this is well spent because it goes for various schemes of the government.
You wanted to come in on that?
Come in on what Sanjay said. I think this complaint that the budget proposals hit at the capital market investors. How do you think that the capital market gains of the last 4 years happened? They happened because of the government's policy of fiscal prudence and stability,
yes,
that kept inflation low, interest rates low, and which gave the markets, the investors, the confidence that this government is not going to become fiscally profligate, etc., which would have sent interest rates much higher.
And an upgrade after almost 14 years, hard work.
A credit rating outlook upgrade. And today, the 10-year bond yield of India is lower than the 10-year bond yield of Indonesia, which has a one-notch higher credit rating than India. And all these actually play into the capital market valuations because of the lower discount rate. So I think we need to...
So it can't be that if you are gaining, you don't give credit.
You are gaining because of government's prudent macroeconomic and fiscal policies.